What's going on, guys? Welcome back to another video. In this video, I've got another incredibly important AMC update to bring all of you this afternoon. So what we're going to be covering in this video is a part 5 to my series on AMC will be crashing the market. Now, before I get any of these comments again, I saw you guys commenting on a couple of my previous videos that we have had in this series, and you guys are actually correct. AMC, the movie theater company, is not going to be crashing the market. What is going to be crashing the market is the fact that the hedge funds and the institutions who are shorting AMC have massively over-leveraged themselves. They have been over-shorting this stock to artificially push it down, and retail investors have gotten on the other side of this trade in order to force the biggest short squeeze of all time. So that is the situation that we have at hand, but we have a very important situation to go over today. We have data that is showing us something very important, that it is possible that shorts are starting to return some of their shares, but this does not necessarily mean that shorts are starting to cover, and I'm going to explain to you guys exactly why. So before we get into the rest of this video, if you guys enjoy the information and analysis that I provide for you throughout this update, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps me out a whole lot in getting this information out to as many people as possible. And the more people that are fully aware of this situation, the more people that we can get into our AMC community, the better off we will all be. So when we're looking at the chart of AMC, we can see that as that news came out this morning about that 11.55 million share quote unquote offering, we did see a very significant drop. Now, there was a lot of FUD surrounding this from the news media outlets, but we are going to see an interview between Adam Aron and Trace Trades later tonight. So make sure you guys go take a look at that, because that is really going to be it's going to explain everything. Now, this drop that we saw on AMC was not the only stock that had this significant drop. We saw a lot of other stocks across the market see a drop similar to this, and I'm going to show you guys exactly why this has happened. But before we can really get into that, it all has to do with options at the current time. So when we're looking at this June 4th, 2021 expiration date, we can see that over the last week, we've seen a lot of these contracts run in the money. We are seeing a lot of open interest. And if you guys have watched my previous video on AMC about how gamma squeezes work and how delta hedging works, make sure you guys go take a look at that video, because that is really going to be something that you need to understand. But when we come out to this June 18th, 2021 expiration date, look at all of these call options that have been expiring in the money. There is 143,000 open interest on this $40 strike. Now, this strike did actually go up to a 225,000 open interest, but it is also possible that people have been, one, exercising these contracts, 2, selling their contracts to buy more shares, and 3, selling their contracts to roll over to some of these further out strikes that we have been seeing added to the option chain. Now, this is very important. When we see a lot of options contracts run in the money very quickly, the institutions and the market makers have to do what is called delta hedging, and they need to go out on the open market and buy the appropriate amount of shares to cover the actual amount of options contracts that they sold in order to become quote-unquote delta neutral. Now, here is something very important that came up today. So to all clearing members, June 1st, 2021, monthly clearing fund sizing report. So as we can see, monthly clearing fund sizing report. This is something that comes out every month, and a lot of people were kind of freaking out about this, but I still believe that this is incredibly important. So as set forth in OCC Rules Chapter X, or I'm pretty sure that's Chapter 10 if I'm getting my Roman numerals right. So clearing fund contributions, each clearing member's contribution to the clearing fund is resized monthly, meaning that if one person's positions start to go against them, they will re-up their margin requirements or decrease their margin requirements in order for them to maintain their liquidity standards. So if this sizing report shows a deficit, such clearing member shall satisfy the deficit by a deposit in a form approved by the OCC by 9 a.m. Central Time, 10 a.m. Eastern Time on the second business day following the issuance of such clearing fund sizing report. Now, any clearing member who does not satisfy a clearing fund deficit within 2 business days ending 9 a.m. Central Time on June 3rd, 2021, will be immediately issued a draft upon their bank in order to satisfy any clearing fund deficit. So the OCC is actually the Options Clearing Corporation. So this ties into what we were seeing with the options. If the market makers and institutions do not have enough liquidity to cover all of those options that have just ran in the money, they are going to have to sell off some of their other assets in order to maintain these liquidity standards. This is exactly what I have been talking about over the past couple of weeks. When we see this short squeeze situation kick off for AMC, in order to either maintain these short positions or actually cover the short positions once we actually see that we are getting into the short squeeze, these institutions, if they own a big position in any of these blue chip stocks, medical stocks, or even the overall indices, they are going to have to liquidate those positions, which could cause a massive selling pressure wave on the overall market in order to, one, as I said before, add cash into these margin accounts in order to continue shorting AMC, which is beyond me at this point, why they would want to continue shorting the stock at this point, or finally throw in the towel and actually cover the short position. So this quote-unquote potential margin call that we are seeing today, it doesn't really have to do with AMC shorts. In my opinion, from what I know about this situation, it looks like it has to do with all of the options that have expired in the money. But there is something very important to note on the Ortex data. So we are seeing right now, this update actually came in. I got a screenshot from my buddy Rogue the Legacy. Sorry, there's 2 Rogues. So Rogue the Legacy over on Twitter. Make sure you guys go give him a follow. He's got a lot of great information over on his Twitter page. So we are seeing now the utilization start to fall a little bit. Very interesting. The returned shares today was about 5.95 million, which these are live updates. And then we are seeing the actual borrowed shares against AMC at about 5.85 million shares with a net borrowed change of about 96,000 shares being returned. Now, the estimated current short interest as a percentage of the free float is at about 17.91%. But the shares on loan is still very high. We should see this updated over the next day or two. And the short interest, as seen over here, is still very high as well. Now, a lot of people have been speculating that a smaller institution has been margin called. Now, that's very, very, very possible. Now, in order for that to happen, what they would have to first do is forcibly liquidate their other positions in order to cover this margin call. But they do have about 5 days, if I'm not mistaken, in order to actually satisfy this call. Now, the next step that they could do after this forced liquidation and they sell all of these shares, creating that massive selling wave that we saw earlier this morning, is one, they can just add this cash back to their margin account, or two, they can actually go out and cover some of their short position in order to maintain these liquidity standards. So right now, it does not seem as if any big shorts have started to cover, but it is possible that some of these shorts are starting to actually return some of their shares. Now, the reason why we might be seeing some of the shorts starting to return their shares once they quote-unquote cover them is that it's not always a massive institution that is shorting AMC. Sometimes it's a little proprietary trading firm who has a small short position on AMC, or it's just somebody covering a portion of their position. But at the current time, the data does not suggest that there is a massive wave of margin calls going on. But the OCC data that we saw today could explain some of the sell-offs that we saw earlier today. Now, I also want to bring this chart up to you guys that I have talked about a couple of times in my previous videos. This is going to represent the red line here. It's actually inverted. So when we see this go down, the margin debt is actually going up, as we can see reflected over here. And this is going to be in billions of dollars. So at the current time, the margin debt in the United States is at about $822 billion, with maintenance margin requirements continuously increasing. This is putting a lot of pressure on the institutions, banks, everybody that has all of these over-leveraged positions. Now, even if they aren't having these massive naked short positions against a company like AMC, this is putting a lot of pressure against everybody. And once this situation fully comes to fruition, I do believe that these forced liquidations that we are going to be seeing are going to resemble the price action of the stocks that Archegos had to liquidate a couple of months ago. So this is a very important situation that is unfolding, but at the end of the day, it is still very bullish for AMC in my opinion. We are seeing a slight red day. We have about 30 minutes until power hour at the time that I am recording. So if we are able to consolidate throughout today, even after the massive wave of volatility, this is still an incredibly good sign. This means that we are going to have enough room and enough breathing room on the RSI to continue going up over the next couple of weeks. So that is going to conclude this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.